Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Really quite interesting in the US for the earnings season. So far on the sort of majority have been slightly better than anticipated. Certainly JP Morgan and Citibank on the sort of banking side were better than expected. Goldman's a little bit softer. Also, McDonald's a little bit softer, but obviously the big talking point at the moment is sort of Boeing and the sort of ongoing investigation is that sort of 737 Max and potential issues and potentially withholding sort of information as well from pilots about that aircraft. But certainly the US economy is still sort of pushing along at a pretty good rate. The consumer is still holding up pretty well, and that's really important. It's just going to be interesting now to see how the Fed sort of view the ongoing issues. The sort of China trade deal has sort of all gone a little bit quiet. A little bit of sort of fencing around, trying to get the best sort of deal, if you like, on the nitty-gritty side. And how will the Fed view all of this, and will they need to cut interest rates further? Then against that backdrop, you've still got the impeachment inquiry. President Trump is just sort of saying, it's a witch hunt, it's a lynching, is his latest terminology, which is really pretty strong. But a couple of interesting points have come out. A sort of temporary chief of staff, Mike Mulvaney, has come out and said actually there is pretty much quid pro quo in most of the negotiations that the president has. That is in direct contrast to what the president came out with, especially on his Ukraine telephone call, to saying there was no quid pro quo. Also, as well, President Trump appears to have sort of backed down and listened to the criticism he was facing. Re the G7 meeting next year that was going to be held at his Trump Doral in Florida. Again, at the start, all along, he said, there's no conflict of interest, I'm not profiting from it, etc., etc. But, really was viewed pretty poorly in most sort of circles, even Republicans were raising questions about it. Also, as well as we head into that sort of 2020 election, news this morning that Facebook has taken down a couple of Russian and Iranian accounts as sort of a precursor to the 2020 election. So present US economy is sort of pushing along. There appears to be plenty of cash sitting on the sidelines just waiting to see what happens. Will that get invested before year end? Oil little change, sort of plus or minus a couple of bucks from sort of that mid price of 55. Brexit continues to rumble on. Prime Minister Johnson seems to be suffering sort of embarrassing defeat after embarrassing defeat. They're sort of trying to negotiate it through. He had his deal rejected by Parliament. And a few of the analysts have actually come out and said actually it's a worse deal than the deal that Theresa May put forward and tried to get through Parliament. So quite where we go from here, not too sure, because Parliament has voted that a no deal is not an option. Prime Minister Johnson sort of stands there and says, well, look, we're leaving on the 31st no matter what, and if you don't like it, we're going to have a general election. So sort of watch this space. I think there's still quite a bit to sort of play out in this, and it's going to be very interesting to see how it all does play out. Closer to home, interesting signs in the Australian housing market. That's starting to pick up. Again, you've got record low interest rates. The official cash rate there is below 1% at 0.75. And certainly the Australian housing market has been in the doldrums for the last sort of couple of years, but that's starting to sort of clear through now, and a little bit of a pickup, not just in prices but also in action as well. Likewise here in New Zealand, certainly the housing market is picking up a little bit. That's really on the back of these sort of record low interest rates, and obviously the mortgage rates, which are very, very cheap at present. Government's still facing a few issues though. The sort of latest embarrassing sort of situation for them has been the Auckland Light Rail, which again was one of their sort of the key sort of transport policy. That appears to have hit a few sort of hiccups, and potentially a budget blowout as well, which really is pretty embarrassing. Also possibly as well some interesting developments on KiwiSaver, looking at sort of reviews and how you're actually going to receive your money once you get to the age of entitlement. There is potentially some talk about maybe having, rather than just a cash sum, having an annuity which gives you a regular payment each year. Now, if that is the case, which is again be very interesting to see how that is sort of accepted by KiwiSavers, because most KiwiSavers, are looking for that lump sum once they get to age 65 or the age of entitlement. Now, as we've discussed, obviously the flip side to the low interest rates, obviously for savers, is low term deposits and low bond rates. Recently Argus had a bond 7 years, 2.85 minimum. So if you are looking for income options, there's plenty of alternatives available out there, plenty of the dividend shares offering a pretty reasonable return. And if you're interested in discussing what is available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.